This is Randy Finney with Right Side of the Chart, and this is a mid to latish session update for a Monday, April 22nd, 2024. It is 2:48 p.m. Eastern Time. I'm starting the video and wanted to get one out because I just posted this follow-up. Probably doesn't warrant a front page post because, again, there may be some more upside here. I give you guys some potential bounce targets, but I've also shared and will continue to share because I kind of get the same questions put a lot, and that's fine. That's what I'm here for. But I just wanted to reiterate my experience and my from experience and how I think this thing is going to play out. And that is, again, just as it's likely to start to look like the real thing, like the correction's over and time to get back in the water and the video's going up and the fangs and former fangs, and we start to get some upside momentum, that's usually when they rug pull these things. That's from my experience again, and sometimes I can be a little early on that or dead wrong. We'll see. But that's it. So I just posted here. That's it. I closed out. Had a pretty good position I built into this morning and then added to. I closed that out, and I'm not going. I took a fraction of what I closed out because I can easily see more upside, and that's what I'm going to share here. And I said in here, closed it based on this. It's a break of this 1 minute. I was following this up. You had these on IW, RTY, which are the small caps, futures, SPY, everything else. You have these little short-term uptrend lines, and that's usually what will get a hiccup. Now, they'll probably buy it up. They often do. The first trend line break, you get this quick selling. So I had a very tight stop in there, and that stop and reverse. And being that, again, it looked pretty convincing. I'd put if I didn't put a decent chance, not high, not super favorable, but decent's just better than 50-50. That this could be the end of the run, then I wouldn't have reversed at all. I'm also looking at the VIX being at support. I was able to sidestep that. I closed that out on Friday, and told you, before you bounce, you want to close the VIX ahead of time. But then, anyway, I'll get to that in a second, VIX future. So, and again, it's just a scale in, starter positions. I'm going to go over the levels right now. And that is, let's just do that. Let's just dive into the charts. I'll give you levels. We'll stick with the equity markets. So this is a QQQ 5 minute. I think it's the one I posted earlier, one of the ones. There's that little minor uptrend line. Again, you can view it better on the 1 minute charts. And there was the break, and so far it's brought in the selling. And you can see I had a level. It was a minor support level here. It carries through. You can see it better on the 15-minute chart right here, and this is why I sold. This is a major reaction low. That was a big reaction low before the reaction low before we had an explosive gap up into the trading range. So that's what I was eyeing there. And again, if I said this once, I've said it 1,000 times, but it bears repeating. Especially in a hot market like this, it's just a lot of technical damage. I undoubtedly, a lot of bulls, just got caught off guard. Those that don't read the charts the way we do, that held in NVIDIA and got clocked on Friday, and then QQQ and everything else. They're awake and alert right now. And so where I'm getting at is, I use that analogy, like, rats on a sinking ship. You got a lot of trapped rats that want to get off the ship. It's, it's a metaphor. And so the last thing I'm going to do is try to milk out every penny of 421.71. And again, it was used in conjunction with everything else. By the way, when I say this, and I told you, I just keep checking the charts over and over and over for reasons, to pull the plug. I even made a comment earlier today, said, and I might have said it in the last video, I have been on longs, driving with one foot on the accelerator, the gas pedal, and the other hovering just above the brake, ready to stop and reverse, because, these bear market or counter trend bounces, especially, again, guys, especially on the heels of such powerful, beautiful sell signals we got last week. You don't want to be the last guy or gal at the party to leave when the lights come on and and the game's over. I'm talking as far as gaming the counter trend bounces. So I told you before, it's 433 possible. Anything's possible, but I really doubt, based on the nature of the sell signals we had recently, we're going to get all the way back. That would be almost too easy a gift that I'd have to be suspicious of it if we got up there. And look, if we do, I'll probably be short in there if I have any dry powder. But anyways, that's it. That's all I wanted. It's it's not much, but 2% almost on the pop off today's lows. And remember that it's not just there on this. It's 2 days. We closed there on Friday, and then again we opened a little above it, went down, tested it again, successfully held. But my thoughts from all along. Oh, there's T2. That we'll start to selling will accelerate. But what happened? We accelerated, went right through with very little reaction on T1, and then we got quite oversold. You haven't seen the RSI buried down to that 30 level right there on the RSI. This is the deepest oversold we've had since back here, really when the market bottomed in October. So bulls must be salivating. Those that have been talking about waiting for a pullback to buy, I get it, and maybe they're going to be right buying here. And I bought there, but guess what? That's it. I think we're going to go lower and keep my eye on the prize. So another way to look at it, I'm willing to ride out that move up to 433. And in that post that I just made today, or the comment, I said here that my plan is I'm starting to scale back into the VIX longs and index shorts and VIX long, and we'll continue to add on either strength or weakness. So what does that mean? Okay, that might be confusing to some. Some traders have always have a plan. And number one is, I say this often, pros in this game of investing, trading, pros typically average up on a position, not down. It's the retail money, aka dumb money, that tends to average down. And when they're going long, that is, I'm speaking on a long position that's going against them with the mindset, oh, I'm lowering my cost basis. I liked it. I like Apple. I like NVIDIA. I'm just going to keep buying more shares. It's lowering my cost basis. And pros on the opposite tend to average up. They buy a stock and it's going up. Why? Because it tells them they were correct on their analysis as to why the stock, buying the stock and it's going up. And now, with that being said, I will average down, against a position that's going against me if it's part of a predetermined trading plan. So in this case, when you're shorting, it's everything I just said in reverse. You're adding as you go up. And I'll add up to, but not above 433. You got the 50-day moving average that came in perfectly there. The market usually watches a 50-day. It's a wall of resistance that, although anything can happen, if we do break it, then you have this trend line. I already talked about that, and it's probably going to, send us up to new highs. But again, I don't think we're going to get there, so I'm not going to hold out for a move up to 433 and miss a turn, because if my read is right, this is just, the initial wave of dip buyers. They've been buying as they always do here, and the pullbacks. But this is the first big dip. This is that first big, oh my God, I've been wanting to buy NVIDIA for a year now, and it just hasn't let me in. And now it's down. What was it? What was the darn thing down from the highs just the other day? So peaked back here, made almost an effective, close to a double top there for all intents and purposes, but it's 22% off the highs. So back here, these were relatively small, or 10% drops. And so again, I have to imagine there's a lot of people that have been on the sidelines that stepped in and bought NVIDIA today. And again, if you do, hey, maybe it is going a lot higher. Maybe it is going to take out the highs and go up. But what I can tell you definitively, factually, is 840 is massive resistance. If I thought it was before, what happened on Friday certainly validates that impulsive drop once that level is taken out. And so, I see it best if NVIDIA wants to rally, that's 4.8%. Remember, it's more volatile than QQQ. If QQQ wants to rally up to the 433 level, what do we have here from today's highs? I'll grab where we're at now. You got 2.88%. So that's kind of, there it is, guys. It's kind of my plan. Scale in zone here, return back into shorts. And I could almost flip a coin and say that I reversed too early. And who knows, maybe I'm going to see something today. Maybe we'll pull back. I'm an active trader. If we get a bigger pullback and we come to support, possibly I'll just close those shorts, play another long bounce. That's my active trading account. And I should mention, because I don't think I did last week, long-term accounts, swing trade accounts, that's all sitting tight stuff. That's eye on the prize here for these deeper targets. All right, let's go over the other things going on in the market. Remember the NASDAQ 100, although it's technically an index, it's really not. It's just it's just like those when they came out a few years back with FANG and FANG-D and then the ETFs that tracked what they called the FANG stocks, which then evolved into the Mag 7. It's just a tech ETF or a FANG ETF. It's just due to the high weighting. It mirrors XLK. That's the financials, XLK. So the XLK's comparable level was 204, broke down, nothing but selling there, hit support on Friday, closed a hair below. It's still above it now, and so that's pretty much, it gives up those levels. When it takes out Friday's lows, which I guess will happen this week, that could be tomorrow, anytime between tomorrow and Friday, most likely. If we dumped today and took it out, get out of Dodge. You don't want to be in long sim. We're going to go right down to the 200s. And then, same thing on XLK, the tech sector ETF. Like QQQ, I think we'll overshoot it because I have some decent support underneath. Quite likely. There's a little support right there. Either way, we hit them or undershoot them, and then, then I might step in and buy some longs that I hold for more than just a day. We'll see. But again, the day's not over yet. Let me show you the other things that really come into play here. So Microsoft, remember, this was one of the reasons covered earlier that, the market was likely to bounce off T2 or at least have a reaction, which it did. And so far, Microsoft hit and never even violated that 397 key support, which is the bottom of this big old trading range all year long. Really, that trading range starts back in January, mid-January there. So there's one reason. And there's another reason why Microsoft pretty much needs to take out today's lows, and then that, especially on a daily close, and that'll take it down here to my targets there. 376.35 and then the 364.50, which is right around the 200-day moving averages, and that's going to take Microsoft down about 9%. And so again, I don't want to risk getting to try to game another 1%. Here, let me give it to you. I just told you 2% or so max on QQQ, but I don't even think we're going to go that high. That'd be a back test of 433. So maybe eke out another % or so. Nah, I'd rather start getting back into these short positions earlier and get ready to swing it down. Apple, like I already said, they're buying it because that's what they do. And remember, a lot of these big Mag 7s, they're going to, I don't know how they operate their stock buyback programs, but if I was in charge and you had to buy it and they said, okay, Randy, strategically you need to buy, well, that's when you want to buy on a down day like this. So you're going to see, along the way, there are going to be, these pops, rips and dips. But remember, Apple broke. This goes back to last year. This goes back to when, oh man, I just moved a line I didn't mean to move. I don't know where that was. This goes back to here. I was watching at that time the lower the purple lines to go to open the door for, my bear market targets with not just Apple, but the rest of the lot, the Mag 7 and then QQQ. And at that point, with all of them, the majority of them trading on the 200s and then positive bullish divergence, we closed all shorts and went long. But I told you this time around, I didn't want to do that. That was the last hurrah off the purple lines, I believe. We had a little spike here. And so where I'm going is that it broke and we had a solid close below it. Remember, I have not modified that line. I created that back in October of 2023, back here. And then we tested it and we went long off it here. And now this time around, it finally broke. And today was a back test of it. So we can regain it, but yeah, we could, and maybe a little more upside. But again, what happened with this failed breakout last week, pretty dang bearish. And so I just wanted to point out that Apple took out, now it's got positive divergence. There's a big setup. If something happens, and again, that's why I will not get married. As strong as my convictions are right now, I don't get married to any trade. That's it, period. And I recognize things in there that could be catalysts for a rally, that bullish development in Apple, the former forever and a day, the, most largest of the FANGs or the NASDAQ and S&P, the first $3 trillion, the first $1 trillion company, the first $2 trillion, the first $3 trillion, always has been for years until recently the biggest component of the Nasdaq and the S&P. Crowd favorite. Everybody loves their iPhones. Everybody loves the Apple stock, and blah 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 blah. And so, that's the bigger picture here. It's in this range, and then even bigger picture than that is this weekly chart. And I pointed this out, but just for those new to the site, we had, let me not get rid of it, bearish PPO histogram cross right there I mentioned. This delineates bull and bear trends when the histogram's red. Apple's in downtrends, correction mode, or bear trends. Some of those are pretty big, like the 35% drop during COVID, like the 39% drop in the fourth quarter 18, like the 32% or so drop back here, that what some are calling a bear market in 2020, and I just call the initial leg down. And then we took out the purple trend line. So bigger picture to me says Apple has just really taken out a bunch of big major support level, even the monthly chart. You can see it now. We closed the first monthly close below this long-term secular bull market uptrend line off 2003. That's the trend line we tested in the big Q4 2018 drop, 39% drop in Apple. We tested it again here at the end of 2022 that is. We tested it again recently, and then we broke it. So that kind of tells me, look, if Apple, and again, guys, we're talking about Apple. We're not talking about, pets.com or whatever. They're gone. But pick a, AMC or GameStop. We're talking about Apple. So that's a pretty powerful sell signal. And again, I don't know, sometimes it'll start, one stock goes down and the rest of the market holds it up. But I just wanted to say this long-term stuff that I've jumped out to, monthly and weekly charts, goes into, with what I see here. And that's the reason I told you that that I suspected this, what seemed to be a beautiful looking breakout would likely fail, because that's bear market action. That is a signature move of a bear market. Now, work to be done. We're still right on the 166, 61-ish level. We've got the positive divergence, but we're also below that, that yellow level there on the PPO, negative 1.18, and that's usually in bear territory when you're down there. This is where Apple, you can see also, these are bear trends when the PPO is below there. So that's it. That's one of several. Let me get to the rest. I already covered Microsoft. Still needs to take out 397. Apple, I just covered. NVIDIA, I already covered that. Massive sell signal on Friday. I mean, come on. So you're going to get a bounce again, because this is the new Apple. This is the stock du jour that everybody no, I'm sorry. Let me strike that. Strike through everybody wants to own. Everybody owns, because that's, it's like I say, when everybody's all in on a stock, that's how those sentiment indicators work, by the way, guys. If you're wondering why they're contrary indicators, if you've ever scratched your head and says, why is it bearish for the stock market when everybody's bullish? And why is it bullish for the stock market when bearishness reach extremes? Again, it's only, those sentiment indicators are only useful at extremes, not when you start seeing bearishness increase or bullishness increase. You got to look at their historic ranges. And here, I'll show you. Okay, and I've highlighted this chart many times in the past, many times over the years, including quite a bit recently, because we hit this red line. I've had it here forever and a day. A little single red line, and then a zone really up there, the red zone right there. Yeah, you can see the shaded red box up here, right there. And as it says, this red zone shows extreme readings of the spread between bullish and bearish market participants as per the AAII sentiment survey. That's a survey that comes out once a week, and they poll, market participants. I believe it might even be money managers only. I'm not sure. American Association of Individual Investors. You can check. I don't know who's in there. It doesn't matter. But because it's, it just shows you, this is my buy zone down here, the green zone. I think you can see it using the wrong color tool. But this is the green zone right here. And this is when everybody's bearish, and that's when you want to start getting bullish. Not for the sake, and it's not a timing indicator too. A lot of times there's what I call clusters or persistent readings and you can just see sometimes bullishness stays bullish for quite some time. There was a quick swoon down. I mean, we had a nice correction here. Look, if you look closely, let me get my arrow tool, color it up. There was a spike down here. Everybody was all out bullish there. What happened? Market got the snot knocked out of it quickly, and we went from 0 to 60, from all out bullish to my extreme, all the way down, spiked down to the green level there. That was a correction. So then everybody got bearish, but then that's when, the market turned. That's when you wanted to get bullish. And then recently, as I mentioned, we have a persistent cluster, just like we had a cluster leading up to before the highs in 2020. Remember, this is the S&P down below. The NASDAQ actually peaked earlier in November. Okay, so that's it. Oh, and the logic behind it. If everybody, and again, it's not literally, it's just generally or metaphorically speaking, if everybody is bullish, then he or her has bought their last share of stock. And if everybody's bearish, they've capitulated, they've given up. And so then you don't have, they've already thrown in the towel. And so the selling's washed out. So that's why those extremes tend to work. And again, they are not exact timing indicators. They should be used always in conjunction with other technicals, such as the sell signals we've gotten over the last couple of weeks, with the sector after sector in the S&P first breaking down, market leading stocks breaking down, and then finally the big two I was waiting for, QQQ under 433 and NVIDIA breaking down on Friday. Okay, back to the charts, or the other charts. So that's it. So NVIDIA, maybe it wants back to S840, maybe the trend line. If it does, I will be highlighting at that time that those are objective short entries. If it pops above 840 and starts running in the range, and QQQ's back above 33, something else is probably going on, and you may not want to be shorting at that point. You may not even want to stay short at that point. But we're not there yet. There's a midpoint in the range. I'm going to add a line right there just because I see it. Often when I have a trading range, it's quite often when I find a secure and a well-defined trading range, even if it's a price channel like this, a upward or downward price channel, stock doing that, I usually note that you can delineate, there's usually a support and resistance line between there. And when you're on the bottom of the range, once you break above, you go to the top of the range. And then once you break down the midpoint, you go to the bottom of the range. So I wanted to add that. Let me get the rest of them out of the way here. Alphabet, Alphabet's been one of the strongest there, still well above the 149.46. Amazon's still well above. I just did these today, so no change there. But remember, Meta also at support. But, with this big divergence, TA 101 says if you want to keep it very simple and you're bullish, you're looking to get long a stock, you buy at a trend line. You buy pullbacks to support. So the bulls should be, and they are, buying Meta today. It turned green. It was down earlier. It's at trend line support. However, it's these divergences that tell me a breakdown appears likely and imminent, likely to happen soon. And so that's it. So really, these are the last. There was a couple more holdouts that I just covered. Alphabet, Amazon, and Meta specifically. The rest have broken down, and so we just need these guys to join. And like I said, I had more than enough evidence on when Friday came and NVIDIA broke down. That was it. And that was in the wake of QQQ breaking 433. So just making it clear why I'm not trying to milk every penny on a bounce here as far as, in my active trading account. Okay, and a quick update on the VIX. These are the VIX futures. I'll look at the spot VIX in a second, but I've been watching this. There's an uptrend line. Like I said, on Friday, we hit my second target on QQQ, where I favored, I thought the odds are decent for a reaction. And again, today, I reiterated that this morning. We've certainly had a reaction. The NASDAQ's, everything's up. NASDAQ, small, mid caps, S&P 500, they're all up over 1%. So it's certainly a reaction there. And the VIX is, as it often does, when the market rallies, especially a decent rally, it's going to melt down, and it's at support. So could it go lower? Yeah. And I'll continue to add to it until and unless I don't feel confident to adding to index shorts. Let's just look at the spot VIX, and there's that. So if you've been following this, I'm pointing out we had a divergent high here. We were walking up this nice clean uptrend line. We had, as suspected, would be what we call a post-FOMC whipsaw. That's when the market spiked. QQQ spiked up to high end of the trading range. We shorted it. So this breakdown proved to be a whipsaw. So those that sold volatility or sold the VIX or bought, the index long. And when things went the other way, we went straight down and finally broke out, and one after another. We took out my 1573 level. Then we took out the 1673 level. We ran up to, I had this as a potential target too, this uptrend line right here. Yeah, uptrend line. It was off this low right here. It extended through. And that's what we rallied into, almost there. And look, we pulled right back. Remember, these levels have been here for months on this fixed chart. So back to 1673 is where my line was. The low of the day was 1669, 4 pennies off, close enough for government work. Can it go lower? Yeah. And if it does, I'll continue to buy it down to, but not below that trend line. And again, it's also a function of what QQQ, the Mag 7, the sectors in the S&P, what they're doing as well. Because my trading plan, like I say, is flexible. If I see something, all of a sudden, but as of now, everything I've seen tells me that there's a good chance those next targets are going to be hit, and they're going to be hit rather quickly. So, like I said, give me a 1-2% counter trend bounce off a support like this on QQQ. Take the money and run. Sidestep the loss, turned around, turned it into a nice profit. Hit it pretty hard because it's intraday stuff. Came out. The futures are stable into last night, into this morning. We came back. We second, what happened. We tested that tested T2 again this morning. If you missed it last night or in the futures, this was it right here. This was T2 being hit on Friday, and again today. We opened up. So there were two opportunities, and so when you can see, and they bought in at a higher level and started moving out, that was bullish. The fact it held, so it was an easy trade for just a quick bounce for active traders, because you can, then you have a stop just below Friday's lows, which was never violated. And again, there may certainly be more. That's that same uptrend line I told you that where I was riding up. We got close enough to that reaction low that I gave you earlier, that 15-minute chart right here. And this is kind of, what I call microanalysis, where you zoom in, you get a little trend line break there. You broke it on SPY as well. I was using ES, but the chart. But there's SPY, same thing, little uptrend line right there. And you're going to they'll come in, traders will make other trend lines and trade off. And there's a secondary trend line we're at right now. So this is where they should buy it if we're going to go up, thrust up into the close today. But if they take out this trend line, then it's not getting pretty. It's probably not going to be very good. We'll probably end up rolling over and giving up more of the gains to where, if that trend line breaks right here, I think we'll, oops, get my drawing tool up. You can see we have some horizontal price support right here. So probably come down there. That's about $498.50, almost $500. Smallies, there's the trend line too. So that's where I fired off the RTYs and reversed those as well. So we'll get back into my swing shorts, and we'll see for now. And like I said, willing to add if we go up, willing to add if we go down. Scale back in. There's the kind of a support zone that and you can use it one of two ways. If you're bullish and you're looking to add to or initiate some longs, these are all horizontal levels I'm adding. Then you could buy a drop down to those levels. Let me change my color tool here. Down there. That's if you're bullish. And if you're bearish, you see breaks of these levels, then that's not going to be good. And then IWM 60-minute. We also, here's one thing I that's been going into my analysis. So this was a level I was eyeing for IWM right here for RTY to game a bounce. This is a 60-minute chart, by the way, of IWM. And there's another and still a very doable target. It would still keep us healthily in a downtrend line. Again, I'm just in the mindset of I'd rather sell the earlier targets based on where we're at in my kind of plan. Everything's playing out so far, so I'm not going to milk the longer-term targets like I might a few weeks ago when we were back in the trading range. But if we do, I'd love to see a push into 199.64 and the downtrend line right here intersecting resistance to add to shorts. But I think there's a decent chance we're not going to get that opportunity. So, and you can also see here I have this small bullish falling wedge on IWM right there. It's nice and clean. Breakout measured target of a bullish rising wedge or falling wedge, bullish falling wedge pattern. That's my problem. I'm always shorting bearish rising wedges and I'm buying bullish falling wedges. It's the measured target's the widest part of the wedge added to where it breaks out. So we pretty much met the measured target, and we're in a downtrend. In a bull trend, measured targets for bullish patterns like bullish falling wedges in a primary bullish trend tend to meet or more often exceed their targets. However, it's the opposite. In a downtrend, when you're gaming counter trend bounces and you're going to trade a bullish chart pattern, it's often going to fall shy of, maybe meet its measured target at best, or quite often fall shy of that. So that's also my mindset. And then finally, this is just kind of a visual thing for me. This is positive, aka bullish divergence, but from my experience and just my read on the market and everything I see here, we're going to do this. And if we're going to put in divergence, we could put in, this is kind of flattish divergence. See, I like to see clean separation on the troughs in the PPO. So if it were to curl down and then curl back up over here, do this, and the RSI as well. And so you have these two distinct valleys or troughs. That's the kind of divergence that usually sets up a lasting rally. This gives you usually a little thing. So that's it. So that's what I could see as another thrust down. This has been a short trade forever and a day. There was the bigger, again, this is big picture stuff, much bigger, more powerful bearish rising wedge on this more significant daily time frame. Our breakdown, our back test, that was a rejection at the old trading range from back in 2021, 2022. Nothing but red sticks so far, mostly. Hit hit the 200-day moving averages, where the algos will step in and buy, humans will step in and buy. But on IWM, based on where we're at and the fact we re-entered this range, and I've already shared this with you many times recently, we're back into this big trading range after a failed breakout. And so counter trend bounces aside or not, ultimately we're going down to most likely the bottom of the range again. And then, in my opinion, we're going to also go down through the bottom and resume the bear market in IWM that started back in late 2021. Okie dokie, I could go on and on and on, but if I do, I will not have this video out to you before the close. So let me fire it off here. It's 3:21 now. I'm gonna process upload. It's really YouTube's. As soon as they get it rendered where there's a thumbnail image and it can play back in the standard definition. Remember, in time-sensitive stuff, I fire it off as soon as YouTube it can be played. They're still rendering or processing the videos on their server. So if you refresh the page after a couple minutes, try it again until you get that 720p HD quality, and then you can see the charts a little better. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.